Hey traders, I'm going to start with the bond markets this weekend. It's my weekend video. Please like my video before I get started. Please retweet it on Twitter. I'm Gumby9662C on Twitter. And you can always leave comments below in the comment section on YouTube. And if anybody wants some of these studies I got on my charts, just let me know. Write me on YouTube, and I can see if I can share these studies on Thinkorswim with you guys, okay? So I'm going to really start my video here real quick, talking about these ZNs. This is an unprecedented sell down in the bonds. These are just the 10-year bonds here. It's all across the board. The bonds are just getting crucified with high yields just spiking because of the whole inflationary fears hitting the markets. And we have significant data hitting Monday and Tuesday. Both could be driving, it could be just driving the fear up, and the fears aren't going to be quite as bad whenever the numbers actually come out. So just remember that going forward. This is a significant possibility of a bounce here on just the ZNs themselves. I'm just going to stick with this for the bonds. We're at the midline on my Fib fans, and we're right around the 50% on this new channel. Typically, these 50% channels tend to be a bounce point. That it has bounced here before. If you look way back here in 2008, this has been, it has bounced here before without actually coming all the way down to that line. The next target below here for that is a really significant line in the sand down here below. Not saying that we're going to bounce right here come Monday morning, but that as fast as we come down, there's all kinds of gaps above us. That makes sense to have some sort of backwardation, maybe as early starting into tomorrow's session. So heads up on that going forward here. And a theme that I'm really going to put out there real quick. So we got almost $95 billion that the Federal Reserve is going to be shoving into the equity markets of balance sheets which the current Fed currently owns, and this legacy debt that they are going to take off their books. And over the next year, they want to take $1 trillion off their books. Of course, they got $9 trillion on their books, so it's not a big deal. I mean, they're not ending what they've already got on their books, but they're trying to bring down the debt on their books. And so in so doing, what they're trying to do, and we're already seeing verbiage out of the White House, they are trying to discourage and talk down the buyback programs and the idea of issuing new debt for buyback purposes. So a theme we're going into this earnings season, I think you're going to hear a lot of companies suspending their buyback programs in an attempt to negate some of this interest rate explosion to the upside, this inflationary interest rate, by hopefully by eliminating a lot of this buyback potential and then refinancing it with debt. Hopefully we can get the whole debt thing off the table, new debt issuance off the table, and the Fed will be able to come to put that money from their balance sheet back into the normal markets and not be too disruptive to the current interest rates. And that's what this big fear is all about, of all of this big glut of debt, legacy debt, being added to the normal operations of the current debt. So, that's the main thing that I think is going to be seen this whole quarter of earnings season. Okay, guys? Okay. So if you like that idea, just let me know. Okay. So another thing, going into this week, we did break this trend, this channel I've got. We did break down inside of that Friday. So heads up on that going forward. It does suggest to us that we're going to be retesting these lower lows. This is the corporate debt side of the equation. This is high yield. This is supposed to be the highest quality debt out there right here. This suggests that we're going to actually see some more downward pressure here in the corporate debt world. And I don't think you're going to see, until you start seeing companies coming out and, like I said, saying that they're not going to be issuing a lot more debt or not. We actually need to see some sort of confirmation that there's just not going to be a total flood of debt a bubble of debt all hit the market here in a relatively short amount of time. A lot higher debt levels than what we're accustomed to. Okay, and debt issuance. Until we see that, these yields are just getting out of control. So we really got to see some sort of settling down here, that proving that the supply can more than adequately be absorbed going forward here. And that's a big gamble. So I don't know. We'll see what happens. Okay, guys, some main takeaways here on SPY. The blue dotted line right here, slash line, that is your market maker move, expected move to the downside, and that's the one to the upside going into this week. We closed right on our quarterly pivot, which of course our quarterly pivot's below last quarter, but we are still above our monthly pivot right here, okay? So I'm not really for sure what's going to happen here. Things still look okay. You go on your cloud, we're still above our 4-hour cloud. So on a shorter time frame, wait, correction here. SPY is actually below our 4-hour cloud. I'm sorry, and so this is a little bit more bearish, a bearish take going forward here, because we do have a trend cross that happened Thursday, and so we are setting up. We are in a bearish possible trend here on our SPY, and if you go up here, we're still holding our signal lines, and they're not tightening up quite yet. So that's a good sign as well. So get a little bit mixed read on all that. Qs look to be testing last month's opening price here for Monday. So we should, in my opinion, we are going to be gapping down here on our Qs tomorrow. So just keep that in mind here going forward here. So that would start putting us at the top of this volatility box. And if we lose that, then we're back inside of our volatility box. Could be a very quick move all the way down here to our market maker moves low. Actually lines up with this volatility box low as well. Okay, so that would put us right here at the 335.96 before the week's out. So just keep that in mind going forward here. That's assuming no outside move in the markets and this week's trading session. Yeah. Okay, guys. So bottom line is the market maker moves low. That's the CS trend line we got coming down here. That puts us right down here, December, January support area, 192 area, possibly to the downside, possibly up to the side, 202.94 area. That's our expected moves here for this week. So we'll see what happens here. We are, see how we bounced right here. The thing was, if this was going to bounce, it should have done it on the first time. Instead, Friday, we bounced off of it and closed right back on that trend, suggesting more downside pressure here on IWM going into this week. Okay, some things happening this week here. We got the inflationary report from the New York Fed at 11 a.m. tomorrow. Okay, guys, tomorrow. And then that gives you some idea, some inflationary data coming out. So it's likely to be flat or to lower for it going into those numbers on inflationary data. Then we have a Fed, the Chicago Fed president. He's going to be out at 12:40 p.m. Tomorrow afternoon. And then really important, 6 a.m., that's a small business optimism index, which will be out 6 a.m. Tuesday. Okay. And these higher yields, what's going on with the global markets and everything, it can have a very heavy weighting against these small businesses and optimism. So definitely watch that out. Should be a really bad number here on this optimism. And then consumer price index month on month, with crude doing what it's did for the past all month, this number should be extremely hot on the consumer, like I said, consumer price index going into this week. So I don't want my video to get too long here, so let's go ahead real. I got to watch this right here, guys. So basically, these are these are the stocks that make or break the markets. Okay, guys, these are really your most important ones because they are so heavily weighted in some of the most important ETFs in the markets. Okay. And so I'm going to start with Apple, of course. Where's Apple at? Okay. Apple and Microsoft have a weighting of over 40% in the XLK index. Okay. So what's really important to note about this right here, right now, Apple's holding the quarterly pivot and above the monthly pivot, but we're in a fast move area. So you're going, in all likelihood, we're going to, tomorrow probably going to be at least testing this trend line. So that, that is a bearish scenario right out of the bat going into next week. This is the most likely scenario we're going to be coming down to the monthly and back testing at early on tomorrow. And if I want to go over here on my zoom in right here, I want to point out we will be going into tomorrow's session below our 4-hour cloud on Apple. So that's another warning sign we have to be aware of going forward. Okay, guys, now I'm looking at Microsoft here real quick. We've broken the quarterly pivot. We've broken the monthly pivot, okay? We've broken the trend line. So and historically, we've not found much support into this area right here. Typically, we have reversed lower. Down through here, we have found support that would put us down into this next trend line around the 290 area. Typically, what I look for whenever we're having a down move, at least the midline, that would put us down the 285 area. So keeping that in mind, then you come over here on your Ichimoku chart. So we broke out of this on Friday. Well, not Friday, Thursday. Thursday we closed below it, continued closing below it Friday, and now it looks like we're reverting even lower. So Microsoft looks really in trouble here to me, and those two are a major weighting in the XLK index. Be aware. So guys, whenever you're using your Fib fans, here's Amazon, okay? Typically what you're looking for is to come up to the top line there, back and fill, but never break your midline for a continuation pattern higher. We have broken, this is a broken uptrend pattern, in my opinion, okay? So this suggests now that the odds are beginning to dramatically favor a move all the way back down to our trend line down here around the 2800 area. A complete rejection of all of this move to the upside. Just keep that in the back of your mind going forward here, okay? Now, look over here on your 4-hour Ichimoku. We are below. We closed outside and below our 4-hour cloud on that one as well. Why is this important? Amazon is a major weighting in your XLY, your Consumer Discretionary Index. Major weighting. Okay, guys. Tesla. We are holding right at last quarter's quarter pivot. We closed right on that Friday with the new quarter pivot right below us here at 998. Okay, so just remember that. And then 983 is your monthly pivot. So obviously this is still fairly bullish. I do want to float that, but Tesla is a major weighting also. So basically, you're over 20% between Amazon and Tesla on your consumer discretionary. Just keep that in the back of your mind going forward, okay? And then if you go look at your cloud on that one, I want to point out here. So we do have, we are closing below our moving averages. We are getting MA crosses going into next week here, possibly. And if we were to open at Friday's close, we could be setting up a potential breakdown below the cloud to start Monday's session. Another one. This is one of our market maker movers this week. Taiwan Semiconductor is reporting this week, guys, and it could do or die this market. So just keep this in mind. I'm just showing it on the 4-hour there. Let me go ahead on a weekly here and show you what's going on. We got a gap below us here. If we were to start to break down, this does look like a potential breakdown scenario. Your target now could be as low as $82, $81, $82, possibly $80 range could be a potential target. That's way outside the expected market maker move for the week if something like that were to happen. But bottom line is what's going on in China could have a massive impact on Taiwan Semiconductor's outlook. So be aware. So what's going on here with JP Morgan is kind of concerning as well. We've had a real significant sell down already going into earnings. Logic would say that we are trying to complete this pattern on JP Morgan to the downside. So just keep that in mind. If that were the case, JP Morgan could be down here into the 117 area, way outside an expected move to the downside here for JP Morgan. So be aware going into this week, we do have those earnings hitting the tape. And if you go down here on a 4-hour time frame, which this gives you your swing idea, this is a swing short still. So be aware of that. We tried to cross we are trying to cross our signal lines for a bullish move higher. So keep that in mind. We wicked out there Friday. They're trying to support this level right here for earnings. But we do have earnings this week, so be aware of that. Another one reporting this week is a very, very strong stock pattern. If the markets were to hold up here, possibly 560. 560 would be the expected target into this trend line, fib fan trend line, in my opinion, on UNH to the upside. We're in a breakout pattern, stair-stepping higher here for a possible 560 move here on UNH to the upside. So just keep that in mind. It's like I said, a very strong pattern, but that is out there. But I do want to also point out, on a 1 second here. So if you do a measured, 1 second here. So on a weekly here, as you can see it, we are well above our well-established channel going into a major news event. So just keep that in mind here. This, in my opinion, UNH is one of those post-COVID beneficiaries because we're probably going into an environment where high employment and far less sickness and illness. So the margins should be exceptionally a lot better, especially since there's so much money still available in the whole healthcare space, and they're trying to even get more money in the healthcare space right now. So be aware of that situation. Very strong pattern. Really one of the most bullish charts that I have on my watch list. So my biggest concern going forward is just how much market weight you have in just 5 names. Pretty much the whole past year since Biden got in office, for the most part, 5 stocks have pretty much justified the entire move of the entire stock exchange since he's been in office. And the fact that we're rolling out of those names and it's supposedly into these more defensive areas, it's giving me concern, okay? So I do want to float that idea going forward. So one takeaway I do want to really float here, guys, and this indicator right here shows the percent above average volume, percentages above average volume that we're getting on a daily time frame. Okay, and my main takeaway is that the sell side pressure on volume is greater relative to one's neutral. So you're getting a lot more stocks selling below the one, in a greater amplitude than what you're getting the rotation trade into like the XLVs and the XLPs and the more defensive areas of the market. So money is coming out of the markets in my opinion in a much larger amount than what money is coming back in, even though the indices are not adequately depicting that scenario. Okay, guys? So that's all I got to say. It's a little bit longer than I normally do. It takes forever to upload these things when they're this long. So I apologize for being so long. Please retweet my videos and hopefully help you guys in your trading.